So now students, let's start on this one. All of you will just confirm once. All perfect. Mary, Ram, Trinath. Perfect. So now students, so we'll now quickly now students, we will now look into the discussion that we are doing about capital gains. A very quick again a recap of our capital gains part. We were discussing now these 4 sections are the one which is a really game for all of us. So far as the capital gain is concerned, 194IA, 194LA, IC and DA. Obviously students, some of them you will be encountering their discussion when we discuss about the capital gains area, but still we will be trying to look into that. 194IA is the most important of the entire lot of the TDS obligation on the buyer, where the buyer will have to where the buyer will have to deduct the TDS students. When the TDS will be required to be deducted, either the consideration amount or the stamp duty value of that immobile property for which the buyer is making the payment. One of the two should be rupees 50 lakhs or above. One of the two should be 50 lakhs or above. Only then the buyer will be under the obligation to deduct the TDS. Only then the buyer will come under the obligation to deduct the TDS. This is what this entire scenario is all about. That is the point, students, in this context. So one of the two students is what needs to be looked upon. That is either the stamp duty value or the consideration amount. If it is rupees 50 lakhs, so if it is dot 50 lakhs also, even that is sufficient for creating the obligation to deduct the TDS under 194IA. So in one way or the other, if both the amount, students, stamp duty value as well as the consideration amount is less than rupees 50 lakhs, what we are going to say that no TDS will then be required to be deducted. No TDS will then be required to be deducted, and that exactly what this particular point is all about. So we have seen this particular discussion. I think we have seen those examples also which we had to discuss in this regard. And one only important point, students, that you should be careful about is that the rural agricultural land. Students, rural agricultural land, as you all are aware, they are not a capital asset at first place. Therefore, on their transfer, there is no chargeability of the capital gains. On their transfer, there is no chargeability of the capital gains. So therefore, the buyer who is making the payment for the transfer of the rural agricultural land, that particular buyer will not be required to deduct any TDS on such particular payment. That particular buyer will not be required to deduct any TDS, students, on that particular payment. Is that point clear to all of you? Other than that, students, we have also seen some important aspect about the split up price and the consolidated price. The split up price system, wherein deliberately to avoid the exposure of 194IA, that the consideration is split with the basic selling price they mention, and apart from the basic selling price, they give you like membership fee for the club, car parking charges, electricity supply, water charges. So they give you a split so that the basic selling price is well within 50 lakhs, but I've add the other component. The moment you add the other component, students, then in that particular case, students, it touches 50 lakhs or it goes above 50 lakhs, and therefore in that case as well, there will be an obligation to deduct the TDS. There will be an obligation, students, to deduct the TDS, and that exactly is the point. I hope that all of you are clear with this one. So with that, students, which has been there, and the last but not the least, students, no requirement of the TAN, students, would be there in this context. We have discussed this particular part. The buyer would be purchasing the house property or the immobile property only once in his lifetime. The buyer would be purchasing the house property or the immovable property only once in his lifetime. So what do you think in this case? What do you think, students, in this particular case, that will he be required to get this stand and then get into the procedural compliance of filing the returns and etc. and all those things? Answer is no. So those things are being absolved. The buyer will not be required to get into all these hassles because no TAN, students, is required for the particular buyer in this regard. Now, students, one particular part which I think the next section, which I told you, the last section in fact of the capital gains, which is that particular one, students. The last section, students. (194) DA. 194 DA, students. Maybe it is 194 DA. Now, if you look into 194 DA, students, what they say is that any sum under the life insurance policy. Now, again, it's a very important section, students. There are some impact of the insurance payment under the capital gains part. No issues, Mary. Some impact, students, you are going to witness in the capital gains part on this insurance payment. Now, in this particular context, students, what they say in 194 DA is this, that any sum under the life insurance policy. So here, students, as you all are aware, the insurance company which is making the payment to the policy holder, to whom? To the policy holder, at the time of payment of the insurance money to the policy holder, that the obligation to deduct the TDS under section 194 DA will arise. That the obligation to deduct the TDS, students, under section 194 DA will arise. Now, what exactly is this obligation, students? We will see in this regard. But before we enter into this obligation part, students, there is this one very important section, which is section 1010D. It's very important, students, for all of us to understand the implication of section 1010D, students. So over here, students, 1010D, students, is an exemption, and I have told you already, students, whenever there is an exemption, will there be obligation on the part of the payer to deduct the TDS on that particular amount, which is exempt in the hands of the payee? Will there be any obligation to deduct the TDS in the hands of the payer to deduct the TDS? To that, the answer is no. No such obligation, students, will arise in this case. We have discussed many sections were there, and also further as we will proceed, there would also be many sections that you will find or across it, Ram, Mary, that no obligation will arise. So first and foremost, it's very important to check what is the exemption which is applicable in that section in the hands of the recipient. If it is exempt, then the payer who is making the payment of the amount will not be required to deduct the TDS. Always keep this point in mind as a standard result under the TDS chapter. And on that background, students, if we see very carefully, we get this section 1010D. Now, students, 1010D is, as I told you, the amount paid by the insurance company to the policy holder. That amount paid will be exempt in the hands of the policy holder if it falls within the scope of 1010D. Now, what is this 1010D in this context? So 1010D, students, if I look into it very carefully, then what we get it, students, in this regard. Now, this 1010D talks about when students, the policy has been taken. You have to check the date in the question. So the policy taken, that is what it is. So policy taken in this context, it has to be either before 2012, 1st April 2012, or on or before, on or after 1st April 2012. One of the two students. On or after 1st April 2012. So either it is before 1st April 2012 or it is on or after 1st April 2012. Now exemption in this case would be applicable. Now I'll give you some example also, don't worry. But just first, you can also copy it down, students. In your notes, students, first in your notes that you're taking, notes on section 194DA. Give the header, notes on section 194DA. So what did I told you, students? If the policy has been taken before 1st April 2012, then be careful. If the exemption of 1010D, students, would be applicable if the annual premium is less than or equal to 20% of the sum assured. So policy, there is a sum assured, no? So the annual premium is up to 20% of the sum assured. That is the point, students. And if it is on or after 1st April 2012, then as per 1010D, you will find the exemption being applicable if the annual premium is less than or equal to 10% of the sum assured. Less than or equal to 10% of the sum assured. I'll give you some examples, students, in this context, and you'll appreciate these examples that we are talking about it. Say, for example, students, in this regard, some of the policy, students, which I have taken, or maybe if you check with your parents, who they would have taken also. I have taken some of the policy which is going back to 2012. Somewhere in 2008 I have taken the policy, 2009 I have taken the policy, like that I have done it. Some policies. And some policies I have taken now also, which is definitely on or after 2012. Now you people, when you will qualify and then you will take your insurance policies in those cases, then also your would be on or after 1st April 2012 in your case. I have those policy which has got both on or before 1st April 2012, before 2012 and on or after 2012. So I need to check for exemption. Obviously I have done those check while taking up the policy. The first question that always we ask, this question, which question? That whether this particular sum which I am going to get on its maturity, primarily, is it exempt in 1010D or not? If I don't want a tax of 30% on that. So that's the first criteria for selection. Not the first criteria, I must say it's the second criteria. Obviously the first criteria is the insurance itself, and then the second criteria is these things. So therefore in that context, you always check into this kind of a scenario. So if supposedly if you fall under this category, then students, what we will say, that absolutely no TDS will be deducted by the payer. Who is the payer? The insurance company at the time of making the payment. Payment of what? The sum under the insurance policy. No TDS will be deducted. No TDS will be deducted, students, at all. And what is the rate of TDS, by the way? Now supposingly you say, no sir, I have taken some policy wherein the premium which I am making is much higher than this 10% or 20%, as the case may be, of the sum assured. If that is the percentage of the premium, then no exemption. And if no exemption, then the amount is taxable in the hands of the payee. If no exemption, then the amount is taxable in the hands of the payee. All of you agree? And if it is taxable in the hands of the payee, then the payer of the amount, who is the payer of the amount? Insurance company. then the payer of the amount, which is the insurance company, will they be required to deduct the TDS under 194DA? And the answer is yes, they will be required to deduct the TDS in this regard. Now just I want all of you students very carefully to read in this particular context these two things. One is the threshold level, the threshold limit, students. That is the amount which is not which is less than 1 lakh rupees per annum. That amount which is less than 1 lakh rupees per annum, which is paid by the insurance company to the policy holder. So if they are making the payment on maturity of say amount less than rupees 1 lakh per annum, then there is no TDS, because it's a very small amount. The government is also not interested in that. But if it is then more than that, then yes, the TDS will be deducted. And how the TDS will be deducted, students, a very unique calculation will be made over here. For the very first time, this is the most important column then. Students, this becomes the most important column. So be careful, students. Just read this one, students. All of you. Very important column. Once you have read it, students, just let me know. Fine, students. So this is about the amount of, can you see this? Up till now, students, you have got the TDS to be deducted by the payer. The TDS to be deducted by the payer on the amount which they have paid. On what, students? On the amount which they have paid. Suddenly, for the very first time, you are encountering a case where the TDS is required to be deducted by the insurance company who is making the payment at the time of maturity. On what they have to deduct the TDS? On the income in that payment that they are making to the policy holders. The income in that payment that they are making to the policy holders. Very unique, isn't it? The income in that payment which they are making to the policyholders. Now, whose income? Policyholder income. Income would be from the point of view of the policyholder who is receiving the amount, not from the point of view of the insurance company. For them, it is an expenditure, isn't it? So, therefore, the question is that what is the income of the policyholder in that payment made by the insurance company to the policyholder? What is the income of the policyholder? So, it is very simple. Income would be the amount received minus what, students? The premium paid so far. The amount received minus what? The premium paid so far. That becomes the income in the hands of the policyholder. That becomes the income in the hands of the policyholder. Is that point clear to all of you, students? Every one of you. So this is how the things are there in this context. Now there is one more section, students, you will come to know in the chapter surrogate taxes, where there are two cases where the payer of the amount has to compute the income of the payee. the payer of the amount, students, one who is making the payment, that payer of the amount will have to compute the income of the payee. So once that section again will come, I will try to recap this particular point with all of you again, so as to make a particular conclusion that look, entire income tax law, we have got these two cases where the payer has to deduce, has to derive how much is the income of the recipient in that particular payment, which is made by the payer. How much is the income, students? Everything, Prinal, everything. So therefore, in this particular case, let's take a small example, simple example. So supposingly Mr. herein, say for example, students, supposingly Mr. A has taken the policy on 1st April 2012, so 1st April 2020, for which he has paid rupees 1 lakh as premium. Full stop. On 31st March, 1 lakh as premium per annum. On 31st March 2024, the policy matures and the insurance company makes the payment of rupees 8 lakhs in the bracket, including the bonus amount. How much TDS that the insurance company has to deduct on such payment? How much TDS that the insurance company has to deduct on such payment? So students, work it out. Obviously, it's not the sum assured. In any case, we can say it is going beyond 10%, isn't it? The bonus may be, say, of rupees. So what is the amount, students? Indeed. Now see, for example, students, check out the period for which he has paid the premium. You can calculate yourself in this regard. The premium that he has paid, students, starting from 1st April 2020, 1st April 2021, every annually, na? That is the date when the premium will have to be paid. Next one, students, would be, that is a date when it becomes due. So when it becomes due, when you actually have paid the first premium. First premium was paid on 1st April 2020. Second would be 1st April 2021. Third is 2022. Fourth is 2023. Fifth is 2024. No. The total premium paid, students, in this particular case will be 4 lakhs. Against that, the amount received in this context, the amount received, students, in this particular context is 8 lakhs. So the income portion is how much? Income to the policyholder, PH I'm writing, is 4 lakhs, and the rate of TDS is 5%. So therefore this is also important. So it is in excess of rupees 1 lakh. That's a threshold that we have to always keep in mind. Never forget this particular thing, students, because chances are very high that sometimes the income is less than 1 lakh in this case. Then in that situation, students, no TDS, isn't it? So therefore always keep in mind that this should be more than 1 lakh. What should be more than 1 lakh? The income which has been there in this regard. Now rate of TDS is 5%. So therefore TDS amount is how much? 20,000, students. Now students, question therefore is, that was I was trying to get into it. What should be more than rupees 1 lakh? Quickly. What should be more than rupees 1 lakh? The amount received, that is the amount paid, that should be more than rupees 1 lakh, or the income component, that should be more than rupees 1 lakh. Mary, Ram, Trinant. So students, always keep in mind a fundamental principle under the TDS provision. The exemptions which are being given under the TDS law is always on the payment made. So it is all the exemptions which are being given, the threshold exemption which I'm talking about it. The threshold exemption which I'm talking about it under the TDS law is only on the basis of the payment made. And therefore, students, This is the criteria that has to be seen. That's exactly the game, and this is the twist that the ICI is going to play upon in the examination. So you have to be very careful about this part, students. Please show the presentation in your notebook in the same way, the way I've done it, because these are the aspects of the calculations which are very confusing sometimes. And hence it should be distinguished that though the TDS under 194DA is on the income portion, but the threshold exemption of rupees 1 lakh that is to be considered is on what? Is on the payment made by the insurance company to the policyholder. Is on the payment made by the insurance company to the policyholder. I hope that all of you are clear with this one. So this is what it is in this regard. Fine, students. I hope that all of you are clear with this one now. Every one of you. If that be the case, shall we proceed further? Have you copied on this one, students? Fine. So I hope that all of you have copied this particular point now. So let's proceed further, students, in this case then. So students, over here, if you all can see very, very carefully and what exactly it is, students, in this regard. So please have a look, students. This is the point. All of you have taken a note of it. Now, students, no TDS if the declaration is given. This is something which I told you in the last lecture. The declaration you have to obtain. What is the declaration? Who has to obtain? The payee has to obtain. In that case, that my income which I will receive from this particular insurance amount, that income which I am receiving from the insurance amount, that does not exceed the threshold limit, basic exemption limit. So if at all they are in a position to obtain the certificate that the income which they will receive from the insurance company, if I consider that along with my other incomes, still I am within the basic exemption limit. In that particular case, students, I told you already that for that, if the certificate has been furnished to the payer, then the payer who is making the payment will not be required to deduct any TDS on such payment. Will not be deducting any TDS on such payment. I hope that all of you are clear with this one. Now this particular part, students, I have this, any case is a CG part. It's nothing but normal definition. Just let's read this one out once. As per section 194DA, right to receive sum from insurance policy is a capital asset within the meaning of section 2 clause 14, and any income or losses arising on its transfer shall be chargeable to tax under the head capital gains. Okay, so that is what it is. That's the reason why we are doing this section under the capital gains category. So whatever the amount that you are receiving from the insurance policy, that particular amount will be chargeable under the head capital gains. Okay, so that's precisely the point. Now students, the other two sections which are being there in this context, which are the other two sections and which you have listed down? So students, you will list down these two sections. What are they? You list down the two sections. Which are those two sections, students? The remaining two sections. Indeed, the remaining two sections, students, of the capital gains category. Capital gains. 194 LA and 194 IC. 194 LA and 194 IC, students. Isn't it? So these are the two sections, students, which are being there in that regard. So I hope that all of you are clear with this one. Every one of you. 194 LA and 194 IC. So these two sections, students, I'm going to touch upon under the chapter capital gains. These two particular sections, students, I'm going to touch upon under the head capital gains, students. So with the CG topic, we will be discussing these two particular category with the CG topic. Okay, because right now would be premature on this part, but nevertheless students, let me in fact do it. In fact, it will be more like a revision thereafter. Let me in fact touch upon to these two things, students. Let's do this one, students, so that at least let's make an attempt. Earlier what I has to do reverse, first CG and then this time I'll do reverse. So the CG would be more interlinked approach, having all these aspects of the capital gain and the TDS and the non-resident taxation, capital gains, whatever you have learned. So it will be really be a great particular exercise, and I'm telling you students, the arrangement of the topic is done in such a way you people will really appreciate in the fact that problem what used to happen. I'm telling you students, earlier particular batches which I have taken and this particular batch I'm taking, I'm telling you students the big difference. The conventional pattern is always going from, in fact Mary will appreciate this part, the conventional pattern students is always on the part of first people do the heads of income and they graduate further, they will graduate further. And I'm telling you students, in the examination you will not find the chapters or the questions are targeted in that particular way. In fact, a topic on PGBP and capital gains, we do standalone, isn't it? But they never ask question on a standalone basis. They will always interlink those chapters with the other particular chapters. But unfortunate irony of the students lies is the fact that they never learned those topics in an interlinked manner. And that is the reason why the paper becomes difficult. So therefore now while we are doing this, and then when we do heads of income in this case, which are the two heads, CG and PGBP, that point of time you will understand that the discussion is not only confined on that particular section, you will see how the other topics gets connected now in that case. And that will make a very meaningful discussion. And more importantly students, when we target the question papers, you will find these question papers are being set up in this particular way only. A replica that you will find it in the question paper itself. And that exactly is the point. So students, in that particular case then, let's look upon to these two sections. 194 LA and last thereafter 194 IC. Students, this particular part, what they are saying in 194 LA, compensation or enhanced compensation on compulsory acquisition of an immobile property. Compensation or enhanced compensation on compulsory acquisition of what? Immobile properties. That is the point. Now in that particular case students, for the compensation or enhanced compensation on compulsory acquisition of immobile property, students, what exactly is the game? Please be careful, all of you, in this context. So here students lies the fact that, first a case study students. Now as you all are aware students that many of the acquisitions takes place by the government. Say for example metro lines has to be made. So obviously in India in this point of time this section is in huge demand right now. Why? These metro lines and the highways and these construction which the government is doing, national highways, I know, in fact I have read some data about how much hectare of land or how much kilometers of land and the other properties has been compulsorily acquired by the government through the notification. Because obviously they need to make the entire landscape in a particular way, so they would ensure that whatever is coming in between, that will be compulsorily acquired. And for that, in fact, the government has been doing a very good job of giving a very fair amount of compensation as per the market value. And that's the reason why we don't find any sort of a PIL being filed before the court about the principle of natural justice or kind of a thing. Because obviously whatever is fair market, and sometimes even the premium also are given, knowing the fact that the the owner will not wish to leave this property for the only reason that even the owner knows it's a prime locality. So therefore, in all such cases, the government has also loaded the premium, not only the fair market value, but also loaded the premium so that the owner doesn't say no to their offer. So now in that case, I am getting a compensation. I am the owner of a particular immovable property, and the government is giving me what? The compensation. Now on that particular compensation amount, students, the question that arises over here is this: that is it for me? It's a capital gains. Answer is yes. A compulsory acquisition is also a transfer. Even though the government may have done a compulsory acquisition, but it will still constitute a transfer, students, within the definition of transfer. So compulsory acquisition is also a transfer of a capital asset, and if it is a transfer of a capital asset, whether it will be chargeable to capital gains, to that the answer is yes. If it is a transfer of a capital asset, will it be chargeable to the head capital gains? To that the answer is yes. Now what happens, students, over here? Let's have a look. I'll just give you a case study over here in this case. So say for example, in this context, so students, Mr. A, he has acquired what, students? Acquired, say, building for rupees 5 lakhs. This is year 1. Now in year 3, this was compulsorily acquired. Compulsorily acquired by the government. Now compensation of rupees 20 lakhs was to be paid in 2 tranches. It's in 2 installments. Now which are those 2 tranches? Installment 1, which is year 3, 10 lakhs. Installment 2, year 4, 10 lakhs. Unfortunately, students, in year 4, second installment not paid. But in year 5, government paid rupees 11 lakhs, including the interest. So therefore, what is the TDS under section 194 LA? Please cooperate on this one, students, all of you. and get me the amount. Questions? Yep. Ram. So if you see over here very carefully, students, first of all, the obligation to deduct the TDS will arise under section 194 LA only if the payment of that amount has been made. Only if the payment of that particular amount has been made. So payment, students, is a criteria for deducting the TDS in this case. And then the rate of TDS happens to be 10%. So therefore, in this context, students, here the answer would be in year 3, TDS would be, students, how much? TDS in this context would be 10% of 10 lakhs, which is 1 lakh. In year 4, though the credit is already given to the owner by the government has already given the credit, students, in their books that we are supposed to pay to him 20 lakhs, of which 10 lakhs is already paid in year 3. But 10 lakhs is still payable in the books of the government. So is it to be deducted on credit basis or on payment basis? On payment basis. So no TDS, students, as compensation not paid. As compensation not paid. No TDS as compensation not paid. That is the point. And so far as year 3 is concerned, students, or year 5 is concerned, here the TDS, students, will be deducted. TDS will be deducted, students, and that will be again at 10% on rupees 11 lakhs. 10% on that rupees 11 lakhs, which is how much, students, now in that situation? 1.1 lakh. So therefore the TDS will be deducted at two particular point of time, one in year number 3 and another is year number 5. So please be careful or be mindful of the year. Huh? You cannot say TDS is 2.1 lakh. Ram, be careful on that. Never ever say TDS as 2.1 lakh. You have to say TDS would be for year 3 1 lakh and for year 5 it would be again 1.1 lakhs. Because obviously the obligation in which year is important, that is needs to be known. So year wise calculation always needs to be shown in your answers, and you always have to be made as a reference of that particular year, not on a consolidated basis. Is that point clear to all of you? Every one of you, students in this case. Now just twist, if you have already done with this case, just twist the question further. What will be your answer? If the government paid the compensation as under. As under, students. So how the compensation is paid? Year 3, rupees 1 lakh. Year 4, rupees 19 lakhs. I hope that, students, all of you have written the heading. Have you all written the heading? Notes on section 194 LA? All of you? Notes on section 194 LA, students? And then I hope that this case study has been brought down from that notes itself. So what will be your answer if the government paid the compensation as under? Year 3 it is rupees 1 lakh and year number 4 it is rupees 19 lakhs. So now what will be the scenario in this particular case, students? Quickly! Srinath. Indeed. Mary. That exactly is the point, students. So you will have to say, Ram, be careful. Students, that's exactly the point. Now, if you see over here, can you see that? They have given you rupees 2.5 lakhs. So the compensation that is being paid should be the threshold limit that they have given is the TDS obligation will arise if the compensation which is paid is more than rupees 2.5 lakhs. More than rupees 2.5 lakhs per annum. See, these are the small things. And that exactly is the point. That exactly is the point, students. So therefore, all of you will take a note of it. Quickly. I'll dictate the answer, students. You'll try to write the notes. So below that, write the obligation to deduct the TDS. The obligation to deduct the TDS under section 194, under section 194 LA, under section 194 LA will arise only if the compensation or the aggregate of the compensation amount, or the aggregate of the compensation amount including the interest, if any, is paid in excess of rupees 2.5 lakhs per annum, is paid in excess of rupees 2.5 lakhs per annum. Underline the word per annum. Full stop. Therefore, in the above case, no TDS shall be deducted. No TDS shall be deducted under section 194 LA, under section 194 LA for year 3 for year 3 since the amount does not exceed the threshold limit, since the amount does not exceed the threshold limit of rupees 2.5 lakhs. Full stop. Next line, right, students? However, for year 4, since the amount paid, however, for year 4, since the amount paid exceeds the threshold limit of rupees, exceeds the threshold limit of rupees 2.5 lakhs, therefore the TDS under section 194 LA, 194 LA to be deducted by the payer shall be rupees 1.9 lakhs. Shall be rupees 1.9 lakhs. Full stop. Please write in the next line. And if it is possible, students, if you are having another color pen, use that another color pen. Next line. It is pertinent to note that if the pair if the pair sorry if the payee double E if the payee does not furnishes the PAN or the Aadhaar then the rate of TDS in such a case shall be shall be 20%. Shall be 20%. In the bracket, right? Yes, Ram. 206AA. Always keep this point in mind, students. I hope that all of you are now clear with this one. With that, students, you are through with this. Again, in important section 194LA. We have dealt with this particular part. Now let's quickly wrap up, students, this remarks in this case. So there are some remarks which are being there. Let's look upon to this and let's move on further. So students, again there is one exemption, students. Let me tell you this exemption, students, over here. 1037. One exemption is there. So I told you, all the exemption of TDS should be known. So in the case of, I'll tell you one thing, students. Exemption under section 10, many students are worried. Let me tell you in final CA how to go about it. Final CA. Exemption under section 10. It can be categorized into three parts. First one is with NR taxation, which we have dealt with it. It is must remember. So that is the point, students. The second one, students, which has been there over here. So one is with the NR taxation. The second one, students, that you can see over here in this case is with the TDS. All the exemptions. All the exemptions. And the third one, students, is this section 10AA. It is not an exemption, students, but still it's a deduction actually, but this is the most important one. These are the only things, students, you need to remember it. The remembering part of it. Apart from the basic things like agricultural income 10(1) and all, that is fine. But these are the things which, because you are encountering some new sections for the very first time. Obviously, there are a huge list of exemptions which are being there. Not possible at all for all of you to remember all these things. So in final CA, students, you have to deal with this exemption in a very systematically. One is the NR taxation, all the exemption is important. Second is with the TDS, whichever exemptions you are coming across it, you need to know. And the third one is not in the form of an exemption, but in the form of a deduction under section 10AA is what you need to know it. That is the must sections. And rest of it, students, as I told you, like share of profit received by the partner from the partnership firm is also exempt. So all these things will keep coming in between. That is fine. These are not a must go about it kind of a thing. But these are the things that you should be careful about it. So now one more exemption, students, which is, and if there is an exemption, definitely in that case, the payer who is making the payment, which is exempt in the hands of the payee, that payer will not be deducting the TDS. So which is that exemption that we are talking about it, students? So the exemption that we are talking about it over here, students, is that of section 1037. That of section 1037. Now if you see over here what they have written, no TDS under 194 LA if the impugned immobile property is an agricultural land as capital gains arising on compulsory acquisition of an agricultural land in urban area. Agricultural land in urban area. Can you see that? All of you. Agricultural land, students, in the urban area. So even in that particular point, students, we will have the same discourse. Same discourse, students. Isn't it? That exactly is the point, students. Agricultural land in the urban area, students. So is it exempt under section 1037? So that the answer is yes. Now, as you may know, students, you would have seen, like for example, that in Bangalore, some 20 years back, the area in Hebal, which is near to the airport, Kempegoda, all these areas, students, were agricultural land. But what happens? The population increased because the people started, those who could not afford to be on the mainstream, they started residing in the outskirts of the city. But then that outskirt of the city itself, because of the airports and all, and the other activity, that itself primarily became what? Became an urban land. So earlier, from 20-25 years back, not 20 years back, much before that also, not 20 years back, it is at least, I could say, 30 years back. So some 30 years back, those areas were considered to be rural areas. And people were doing agricultural activity. Now what happened? Because of the population getting increased in those particular area, from the rural it became urban. From the rural it became urban, students. Now what happened? Obviously now that area you are doing, that's an urban agricultural land now. Now if it is an urban agricultural land, students, two things which should, one will be that now the government want to do the further construction, and for that this huge land in that urban area, although the person is doing an agricultural activity, the government would want to compulsorily acquire to pursue its construction activities. You would have also witnessed in your areas also, students, in your city also, you people would have witnessed this sort of a phenomena. And therefore now those compulsory acquisition, it is an urban agricultural land. Now that poor fellow, he would be thinking that this was an earlier a rural agricultural land, because this was a rural area my forefather has purchased. And now suddenly, because of the growth that people started residing to these particular areas more, it became urban. And now the government is compulsorily acquiring this property. So therefore, to give the benefit to them, that if there is a compulsory acquisition, students, first of all, tell me one thing. Is an urban agricultural land, is it a capital asset? Answer to that is yes. It is a capital asset. Rural agricultural land, is it a capital asset? Answer is no. So on a transfer of a rural agricultural land, will there be a capital gains? There is no income. There is no income. So if there is no income, in that situation, the question of deducting TDS will not arise, because that amount which has been paid towards the compulsory acquisition of rural agricultural land, that amount is not an income in the hands of the payee recipient. If it is not an income at first place, where is the question of then deducting the TDS will arise? That is the point. But this is not true for an urban agricultural land, because an urban agricultural land is a capital asset. And if it is a capital asset, on its transfer, it will result into a capital gains. It will result into what? A capital gains. And if it results into a capital gain, students, now you all are aware what will happen, students. Indeed. So in that situation, students, in that particular situation, we will say what? That it is very much a capital asset. And because it is very much, students, a capital asset, therefore on its transfer through compulsory acquisition, very important, the exemption in this case is through compulsory acquisition. So even this is an important particular point. Okay, so if there is a compulsory acquisition of an urban agricultural land, it is a transfer of a capital asset. And if it is a transfer to a capital asset, it is chargeable to capital gains. But because of an exemption under section 1037, exemption under section 1037, the payer of the amount towards such compulsory acquisition, will he be under the obligation to deduct TDS? Answer is no. He will not be under the obligation to deduct TDS, students, under this. So just write one note over here. I just would want you to write one note in this context. Agricultural land, rural, urban. Very important note, students. You'll appreciate as well these notes. Compulsory acquisition or other transfer. Here also compulsory acquisition or other transfer. What are you going to say? Not a capital asset at all. And therefore, any transfer of rural agricultural land is not an income. Is not an income, and hence not chargeable under the Act. Full stop. The question of deducting the TDS on the sum paid for RAL will not arise. Fine, students. If you all have written this, then I'll proceed further. Perfect, students. Now let's look upon to the next one. Be careful. For urban agriculture land, though UAL is a capital asset, and its transfer is chargeable under the head capital gains, comma, a compulsory acquisition of UAL. A compulsory acquisition of UAL is exempt under section 1037, and hence the pair of the amount will not be required to deduct TDS under section 194 LA. The pair of the amount will not be required to deduct TDS under section 194 LA. Fine, students. Now, in this particular case, other transfer, be careful. In respect of any other transfer of urban agriculture land, if the sum paid just write like this, if the consideration amount or the SDV of such UL is greater than or equal to rupees 50 lakhs, then no TDS. Sorry, then TDS shall be deducted under section 194 IA. Just a second, students. Where it went? Under section 194 IA. At the rate of 1%. Mary, compulsory acquisition of what? Yes, capital gains will arise, but of what? Rural agriculture land or urban agriculture land? If it is a chargeability would be there, but it is exempt under 1037. So can you see that? In excess of rupees 50 lakhs, then TDS shall be deducted under 194 IA at the rate of 1%, students. No, exempt 1037. That is the reason why they are getting the exemption on the transfer. So it is chargeable but exempt under 1037. So the transferor will not be liable for any capital gains tax on the compulsory acquisition of the urban agricultural land. On the compulsory acquisition of the urban agricultural land. Have you all copied on this one, friends? That exactly the point. This is the beauty of it, students. See, that's precisely the point. You may be so engrossed in this that you may forget the other one. Don't forget it, students. That's the analysis, and these are the observation and the notings that we are making it for this particular purpose. I hope that all of you are clear with this one. Every one of you. Fine, students. So this is what it is. So we are done with this particular part, students. Where in this context, perfect. Now let's move on to our next particular category, students. Last one. Students, last one. IC. Although there is more to this capital gains of IC, but only a limited part, students, right now we are doing it. Only a limited part we are doing it. Only for TDS purpose we are doing it, students. Just read this particular part. 194 IC. Ready, students? So cash consideration on transfer of immovable property under the JDA referred to in section 45(5)(a). What is that JDA referred to under 45(5)(a)? We will see that later on capital gains topic itself. For any person who is making the payment, payment is made to whom? To a resident, individual or the HUF, and credit is the credit or payment whichever is earlier, and the rate, students, over here is 10%. No threshold exemption over here, students. No threshold exemption over here. Okay. Now, if you see over here in this context, students, it does not include consideration in kind, transfer of immovable property being land or both, building or both, students. Even that is not included. The transfer of immovable property being land or building or both, even that is not included. Sorry, in this case, sorry. Just I've goofed up here. It does not include the consideration in kind. Okay. Now the transfer of immovable property could be of land or building or both, doesn't matter. So this transfer could be of both. Now in this particular context, students, this note we will not be discussing it right now. This note we'll discuss only when the capital gains chapter would happen. At that point of time you'll understand, and again in that context we'll do the interlinking of the same. Okay, and the rate of TDS, which is 10%, this 10% will get increased to 20%, students. Can you see that? This 10% can get increased to how much? 20% if the recipient of that amount does not furnishes the PAN. If the recipient does not furnishes the PAN. Now students, all of you write notes under section 194 IC and give the heading JDA. JDA is Joint Development Agreement. Now this is a REO. What is REO? REO is nothing but the real estate owner. REO, students, is nothing but the real estate owner. Okay. So nothing but the real estate owner. Now this real estate owner is either individual or HUF. Now he has transferred the real estate under JDA, under the Joint Development Agreement, which is chargeable. Under section 45(5)(a). What is the content of 45(5)(a)? That we'll see when we do 45(5)(a). Now to whom he has transferred? So the payer over here is the one to whom he has transferred is a builder. Now what the builder will be doing, students, is that what the builder, students, is going to do in that, obviously you know, students, the builder is going to, maybe if that is a small building or a bungalow, so he will demolish that bungalow. He will demolish that bungalow, students, and on that bungalow which he has demolished, he will construct a building, a huge 30 tower building, students, he is constructing. A 30 tower building, students, he is constructing on that bungalow. Now what he is going to do? Builder, students, in this case obviously is paying the consideration. Now consideration, students, is paid. Now consideration, students, would be, in this case, the cash and check of say rupees 2 crore, plus he has given 3 flats in the new building constructed by the builder. Now students, the obligation for TDS. On the builder. Obligation for TDS students on the builder. Under section 194 IC at the rate of 10%. Now TDS on which component? Under 194 IC. It is only on this component and not on this component. And therefore in that case it would be TDS would be how much rupees? 20 lakhs. TDS students in this case would be how much rupees? 20 lakhs. 10% of 2 crores. When they use the word cash, that does not mean raw cash. It can also mean check also. Means it should be money. It means students money. It should not never understood as a raw cash. This is exactly how the scheme of things will happen. So please understand one thing. So the transferor, this real estate owner students is a transferor. Keep in mind. So this two things. One is this is a transferor. And the builder is a payer of consideration. The builder is the payer of consideration. And this JDA is something which is chargeable under 45(5)(a). This JDA is something which is chargeable under 45(5)(a). Now 45(5)(a) has its own particular conditions. When it is chargeable under 45(5)(a), it has its own condition which we will see when we do 45(5)(a). Is that point clear to all of you? That exactly is a point, students, over here that needs to be considered. So students, with that students, with this we are done with all the case of the capital gains. Be careful students on the rates part. 194 IA, already you are aware of it students. In this particular context, isn't it? 194 IA is at 1%. Thereafter we did the next one students. Remember that last one which was at 194 DA insurance. That 194 DA students, what was that? It is 5% students. That was at 5%, 194 DA. Then you have got this to 194 LA and 194 IC. And what was the rate students over here? That 194 IA and 194 IC students, it is at 10%. Now my only humble request to all of you is this. As you are proceeding further students, you have to be very careful about this. You have understood by now that the confusion would be supreme as we will proceed further. and where the confusion will lie on the rates part of it. And I hope that you already are making the checklist on the very first page. You all are making the checklist in the very first page itself. The first checklist, if you can recall, was on that 194, 194C, 194J, 194H and 194M. You also are aware of the rates, but now not in the memory, in that checklist itself, which is the first page that you're preparing. There itself, friends, do write the rates. So what are the rates? In the first case, 194C, 1% or 2%. In that situation, 1% or 2%, which was being there. Can you fill up the checklist, students, as a assignment, as a homework, students? And also the threshold, you are aware of it for 194C. For 194C, not only 194C, for 194J also you are aware of it, 10%, 2%. And then the threshold is also known to all of you. Same is also with 194H. And then rate is known, plus the threshold amount is known. And finally the 194M, rate is known and the threshold is known. So is also given the case of 194I and 194IB, the next checklist. The next checklist. And then the interest income and the dividend income, the rate and the threshold limit. The rate and the threshold limit, students. Yes. Yeah, that is fine. Yeah, that amount, what you are saying, students, is right. So therefore, that is 193, 194, 194A. And thereafter the capital gains part, right now that we are doing it. 194IA, 194, 194LA, 194IC and 194DA. You know the rates and you know the threshold amounts. Now what I'm only want you all to do, students, is an exercise, which is the most important exercise, students, I'm telling you. And by now you would have realized the importance of that the rates and the threshold is something that you may goof up as you proceed further. Have you realized that by now? Yes. And the topic is still fresh. As you will go further, students, it may fade away. In that case, the challenge would be on this rates and all those stuff. So therefore, the first concern of this topic, which is this, needs to be trashed down. And how you trash down? In that checklist, which you are going to make it right now, immediately. In that checklist itself, the rate and the thresholds. These two things, students, you're going to do it. You'll say, sir, I'll do it later on once I have the mood. No, students, if you think of that, you'll never do it. You will never do it if you think of that. You will have to do it now in this scenario itself. Because as you do it right now, with the concept also of being fresh in mind, these rates get registered. Mechanically copying and doing it without recalling the section, that will serve no purpose. The aim is to register these rates and the threshold limit. And the best way to register them would be when the topic is on, when the recollection is high, at that point of time, putting it in that particular index page that you all are preparing, which I have made you prepare for it. There itself, you will trash it down, students, completely. Everything primarily will be registered in this case. And then your one revision would be only that one page. There are multiple layers in which this topic has to be revised. One is the conceptual part that we are addressing to it. One is on the rate and the threshold part, which will be served by that one particular page. Is that point clear to all of you? So please realize the importance of each and every aspect of this chapter, because that's precisely the way you would be marching ahead in this topic. I hope that all of you are clear with this, students. Now, students, what I'll do, because you will have to prepare this particular checklist, I will leave you a bit early now. But please do that. That's the only reason, students, now in this context. But I will give my next compartment ready. And we are on the verge of now on the completion of this particular topic itself. So our next compartment, students, because there are 3 sections which cannot be done over here itself, that is another topic wherein the sections can be done. In fact, I took the chance for capital gains, but there are 3 sections which are going to be there, which is a topic in surrogate taxes, wherein those 3 sections can be handled. Otherwise, it cannot be handled it over here. So now the next compartment, I think it would be point number 5 if I'm not mistaken. First was for that 194, second one was that was this for the 194 IIB, thereafter the interest, and then thereafter for this. So this is the 5th one, students, in the checklist. So in the 5th one, students, there are 3 sections that you are going to write, and these 3 sections are 194B, 194BB, and 194BA, which is TDS on casual incomes. TDS on casual income. Okay, students. So this along with the last category of TDS, students, in the next class. Last category of the TDS would be in the next class. But the water may go beyond our head if you don't capture what I told you just now. So just if it is just to make a fresh page again for index of TDS and TCS, maybe the last page, so be it, and keep the 2 other pages also empty and keep those spaces also for all the remaining section, so that you are in a position to write the sections and the rate. And I want the screenshot of all of you by tonight. Otherwise, next class link will not be made available. Is that point clear to all of you? That is how the things has to be considered, isn't it? So only when you show me your assignment and how you have done it, not haphazard matter, in a meticulous way, only when the assignment has been shown to me through the screenshot, that the next class link, students, would be shared, or else you are aware of it. Fine. So let's, students, meet tomorrow. I'll meet you then tomorrow, students, and we will meet up on this. Take care.